This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past couple of days. Firstly, on the policy side, we've seen comments from the Bank of England and the US Federal Reserve stressing that they'll continue to look at new measures to support their economies. In the US, Fed Chair Powell indicated that he thought the recovery might take a little bit longer than some of the most optimistic estimates. He's talking more about 2021. But again, stressed that he thought that the US Federal Reserve still had a range of tools available to it, not just in terms of extending its existing programs, but looking at new instruments to help support the economy. In the UK, the Bank of England's chief economist Andy Haldane was talking about extending the types of assets the Bank of England could buy, and also thinking about other policies, and he mentioned negative interest rates as being something that at least the bank would consider, which is something we haven't seen up until this point. On the macro side, the data remains very weak, as you would expect. Still getting information really about March and April for the global economy. And it looks to us as though markets are focused much more on the next few months and quarters rather than the current or the historical data. With that in mind, from a health perspective, it's probably worth focusing a little bit on what we see coming out of Italy. We saw the lockdown in Italy eased 2 or 3 weeks ago. And so if we were going to see an increase in infections of COVID-19, we might expect to begin to see some of that data coming through over the next few days or next week or so. That's something that we'll be keeping an eye on. And we think it could be relevant for the shape of the reopening that we see across a range of European countries. And lastly, on the commodity side, we've seen a significant supply response from the oil industry. We've been looking at the number of rigs operating in the US, which has fallen dramatically over the past few weeks. And elsewhere, we do see indications that production cuts have kicked in, and that's beginning to show up in a more stable oil price than we've seen for a while. And we would argue that seeing the oil price stabilize is a positive indicator for the recovery, at least in the short term, as we begin to see supply decline and also perhaps a little bit of a recovery in demand. Thank you very much for joining us. Look forward to speaking to you again soon.